And nominal yields sound good if you don't actually understand what it's doing to the underlying, right? Which is like, if you're inflating 8% a year, but you're getting 8% a year in inflation, then basically you're just paying taxes.
Yeah. What do you think about that? Do you think it's the top of proof of stake is in?
From your perspective, what are you bullish on? And what are you more bearish or more cautious about?
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible.
Crypto UX? Broken. AI? Can't trust it. Let Magic Newton set you free. It puts your on-chain transactions on autopilot. Does all the work for you 24/7 so you can go do what you want. The vision of Magic Labs. The creators of embedded wallets, used and backed by the best. See for yourself. Simpler crypto UX, verifiable AI agents. Newton.xyz.
Introducing Asset Runes, the future of decentralized finance. Stablecoins natively on Bitcoin. Hedge against volatility. Diversify your portfolio. All directly from your Bitcoin wallet. Secured by ZK technology. This is Asset Runes. Available now, exclusively on Starknet.
Well, let's talk crypto. See, we had Tarun on here yesterday, and I asked him what he's bullish and bearish about.
Yeah.
And kind of like what we did at the dinner, and he said he was bearish on the fact, like he was bearish on staking yields and staking and proof of stake in the sense that the peak of staking businesses could be behind us from where we are today.
Yeah.
And that, the proposal from Near and Celestia kind of moving that forward towards these different models, and that he's bullish on a lot of that capital moving to actually wanting to be used for stablecoin yields and earning yield in that way rather than doing staking yields with, I guess, more volatile proof of stake assets.
Yeah.
What do you think about that? Do you think it's the top of proof of stake is in?
We're probably going downhill from here because staking mania was definitely a little bit of an illusion. Like, I mean, I was at a dinner last night where people were talking about boomers love yields, and like just the idea of like, oh, you can make 8% on this asset, great, without asking what the asset is and whether the asset will go down more than 8% this year.
Yeah.
So like these are nominal yields, right? They're not real yields, they're nominal yields, and nominal yields sound good if you don't actually understand what it's doing to the underlying, right? Which is like, if you're inflating 8% a year, but you're getting 8% a year in inflation, then basically you're just paying taxes.
Yeah.
Right? You're just paying taxes on 8% a year, which is tax leakage, right? It's inefficient. And the original theory for this was that, oh, you're paying for security. But people have increasingly come to understand that this idea that you're paying for security is kind of a meme, right? Like these layer ones, the thing that makes them secure is not, oh, they have this inflation rate. It's like the robustness of the software, who the validators are. The other thing we realized with most of these proof of stake networks, it's the same 12 companies that are running validators on all of these chains,
all of them.
right? Like we're in a professionalized validator world.
Yeah.
Unless you're talking about Ethereum, which actually has, home stakers. Every other chain, there's no home stakers. They're meaningless. So the security model is just not what we pretended it was 6 years ago.
Yeah.
When all this stuff was first getting created, right? And so as a result, it's only rational that we would be fixing this problem and moving away from this world where, like right now, if you're in an ETF and you can't stake the ETF, it's a big problem because you're getting inflated away.
Yeah.
And all the staking ETF, all the ETFs are like, oh, we want to include staking. Why? Because they understand that staking is basically risk-free.
Yeah.
That they understand it's a meme, and they understand it's like, oh, it's like a yield. You're getting, nominal yield on this asset, but really it just means you're not getting diluted by the people who are staking, right? And everyone understands that. So this kind of economic fiction, I think, had to go away at some point.
Yeah.
When we realized the real way that it works. And that's what you're seeing now, is that people are normalizing and saying, hey, you do need some amount of inflation,
Yeah.
but that amount of inflation is very low. So much lower than we were originally claiming that it was. And it's really just diluting people who are either too lazy to stake or who are structurally incapable of staking. And that's kind of it's just not efficient. It's not fair.
Yeah. So I think that the inflation stuff now is also a result of the price action of a lot of proof of stake chains.
Yeah. And really what that means is that, the unit price can go down.
Yeah.
But the person who's staking can still be up.
Right.
Because they're getting 10% a year or 8% a year. Even if the price is down less than 8%, you're fine.
Yeah.
The person who otherwise is in an ETF and their price goes down, 7-8%, they're like, well, I got screwed, and somebody else got made whole for it. That is kind of a dumb system at the end of the day, if that's all that's really happening. And then everybody's paying taxes on the whole thing.
Right.
So, like that's a bad system. I think at the end of the day, like these systems are rationalizing over time. Solana had they had this big vote about whether or not, I think it was SIMD 228 or something, that was whether or not they were going to bring down the inflation rate very significantly. But it was this very complex mechanism that had a lot of bells and whistles. I think Multicoin was pushing it. That one ended up failing relatively narrowly.
Yeah.
But almost certainly there's going to be a second push within Solana to lower the inflation rate, because everybody knows the right answer is.
Yeah.
The right answer is much lower than where it currently exists.
Yeah. Very interesting.
That's that was Tarun's answer to like bullish or bearish, right? I'm
Yeah.
curious from your perspective, what are you bullish on, and what are you more bearish or more cautious about?
I mean, I'm bullish on the obvious stuff. I don't think I'm going to blow anyone's mind by saying that I'm bullish on stablecoins continuing to grow and getting more and more integrated into the normal financial flows in the world. One area that I've been spending a lot of time on is stablecoin credit cards. This is one thing that I think people don't spend enough time thinking about, is like
Or
how,
others?
what's that?
Like Cast?
Yeah, there's a bunch of them that are basically saying, so today the dominant way that people actually pay each other with stablecoins is using something like Binance Pay.
Yeah.
Binance Pay is basically a non-custodial wallet, and these non-custodial wallets, you see them being adopted, but mostly in places where things are really bad.
Yeah.
Right. So you see them in places like Venezuela or in places like Iran or in Turkey, where they're borderline failed states where you have very, very high inflation and people are getting there. It's so bad that you're willing to adopt an entirely new application, even at point of sale. Like merchants are saying, look, you can scan this QR code, pay with Binance Pay. Right. But most places, even where people want to use stablecoins, it hasn't reached a critical mass such that all the merchants are going to accept this.
Yeah.
Right. And so where do you actually get stablecoins to come in a place where, you're like in India, right? Where things aren't so bad that everybody's adopting stablecoins, but there's some people using stablecoins and they're like, yeah, I like this because I want dollar exposure. And the only real answer is that you have to be able to piggyback on the existing rails.
Yeah.
Right.
Yeah.
Now, Coinbase has they have a credit card, but their credit card it's not like a stablecoin credit card, right? It's like there's a normal credit card. You get Bitcoin rewards. It's kind of like, it's fine, but it's kind of like, okay, it's like different flavor on airline miles. You're just getting your cash back in something else. And, it's a Bitcoin. Oh, maybe Bitcoin will go up more and you'll make your money. Okay, great, fine. That's a good reward. But these stablecoin credit cards, what they're doing is they're literally drawing an on-chain balance in stablecoins the moment that you swipe your credit card, right?
Yeah.
That is different.
When you say drawing, like minting the stable coin or borrowing against the position?
No. They are drawing down against your stablecoin balance, right?
Yes.
So you have stablecoins on chain in a wallet, and when you swipe your card at point of sale, they take the stablecoins out of the wallet, right? And because they're doing it in real time, you actually don't have to have stablecoins. You can have whatever it is, as long as I can sell it instantaneously and swap it out into stablecoins.
Right.
You can have it in Athena, you can have it, in staked Sol or whatever, right? You can have it in a staking token. You can have it in anything as long as you can swap it instantaneously into stables. And if that's happening at the point of auth, then at the credit card authorization, then you basically can have anything in your wallet. This translation layer, I think it mirrors a lot of things that we've seen about how technologies get adopted.
Okay.
Right? Is that if you think about, for example, Apple Pay.
Yeah.
Apple Pay now is taking over the world, right? In the US, we went from basically being all on credit cards, and China and many other parts of the world were already on QR code payments. And the US was like, look, credit cards are good enough, right? But we went from basically during COVID, from hunks of plastic to now it's your phone. It's just all your phone.
Yeah.
And why is it all your phone now? The answer is because we piggybacked on credit card rails.
Yeah.
Right? We didn't reinvent the wheel and say, oh, there's a new thing that all merchants integrate, and now you can incorporate Apple Pay and Google Pay and all this stuff. It's like, no, we just piggyback on credit card rails. And that answer is how actually a lot of technology ends up getting moved forward, is that we're not going to go into a new stablecoin stack. It's that instead, we're going to just use the rails we already have and kind of adapt the systems that we've built. So you get both. You get both on-chain balances in anything in real time, programmatic. But when you're buying stuff, you just, you tap your thing and it all works.
So if you're MasterCard or Visa and you're looking at the stablecoin adoption that's happening, are you thinking to yourself, oh, these guys could eat my lunch? Or are you thinking these guys are going to build on top of my existing stack?
What you're saying is that I better make it that these people can build on top of my stack. Because if I don't let them, then they're going to go around me and then I'm really in trouble. Right? They might disrupt my monopoly if they feel like they have to in order to get adoption. But if they feel like the fastest path to getting integrated everywhere, same thing, like imagine that Visa had said, Apple, we're not going to work with you. Screw you. We don't want people moving away from credit cards, right? And you're on your own. Okay? If they'd done that, then Apple would have said, all right, we got to build our own system. We got to get merchants on the other side to be willing to accept Apple Pay because Visa and MasterCard are cutting us out. Right? What they said they did is they cut a deal. And Apple gets 50% of the interchange on what they get to Visa. Now, Google Pay actually has a much lower split that they get with the credit card providers because they don't have as high value clients. Right. Apple is known as being the premium product. There's a lot more spend there, and so they were able to go first and scare them, and say, if you don't cut this deal with us, we're going to go build our own network. Right. So the stablecoins are now in a similar position, is that they realize like, look, right now Bridge is doing this. There's another company called Rain that's doing this. There's a lot more players, as you mentioned. Even Marqeta, which is a traditional payments company, is getting into this game of issuing these stablecoin credit cards. And increasingly, I believe that it's going to look more like Apple Pay and Google Pay.
Interesting.
Is that it's going to ride on the same rails because it's the fastest way to get to global adoption. And at the end of the day, that's all we really care about, right? It's very likely that, again, this stuff is going to introduce more competition, but like the reality is that last mile of how do you actually get this onto the merchant? How do you actually get, Old Navy to take payments in this thing, or like everybody in the world? It might be that, okay, they all integrate Coinbase Commerce or whatever. But an even easier way is that you just have a stablecoin balance. That's connected to a credit card.
You know what's kind of weird though is I was talking to Robbie from your team, and he was quite bearish on domestic U.S. payments.
So I'm largely in agreement with that. I think domestic U.S. payments getting on these rails is going to be very, very slow because, I mean, look, you guys are American, I'm American. Like, I'm not going to use these cards, right? Why? Because I have money in a bank account anyway. Right?
Use that.
And like, I can use that and I'm getting credit, right? Most of these things, actually, there's no credit extension at all. Right, you're not actually getting credit.
Right, that's the.
It's basically like a credit card is the form factor, but really it's more like a debit card, right? It's basically like more of a charge card type, like actual mechanic. Right. So, the reality is that if you're using stablecoins in emerging economies around the world, that's alone is great. Like I'm totally fine with that. Credit extension is not where these things are going to shine because I don't actually know if you're creditworthy by looking at your balance on chain.
Right.
But I do know how much money you have, and I can let you spend that money in real time. Right. That mechanism, and a lot of what credit cards do is, of course, there's more than that. There's chargebacks and all this other stuff. So there's a lot of stuff that credit cards do, but they solve this payments problem, but they don't solve the credit extension problem, which that has to get solved in another layer, and we're not there yet. With respect to actually getting crypto payments incorporated with credit.
One more reason I've seen, at least from a narrative perspective, that these companies are starting to think about either issuing their own stable coins or adopting stable coins for themselves is to lower their cost of settlement. But again, if they're just doing the settlement on top of existing credit card rails, are they not still, do they not still need to pay those fees, even if it's using a stable coin, or is this sort of setting the scene for some sort of deal where they're able to start to split some of those costs and earn back some of those 3% credit card processing fees?
So first of all, I would say I'm not an expert on exactly how the fees break down with respect to stablecoin settlement versus dollar settlement. A lot of the big question is, can you settle directly with Visa or MasterCard in stables versus having to do that last leg of getting the stables out and back into fiat? Visa is starting to do these pilots where they're allowing people to settle directly with VisaNet in stables. Most people are not on this yet. So most people are still settling with fiat, which is actually much less capital efficient because you have to go and, ping circle, turn the USDC back, pay the 30 bips that you have to actually get. There's some latency there and actually getting that thing to get out and then go settle with Visa. So that's actually a much worse flow if you have to do that. But if the credit card systems are willing to take settlement in stables, then all of a sudden settlement is basically instantaneous. Right. They're starting to get there. Visa is probably a step ahead relative to MasterCard on that, but they both see the writing on the wall is that they have to get there, given what the noises this administration is making, right? About wanting to allow stablecoins to be treated on par with other forms of payments. At the end of the day, like the Visa system of charging 30 bips, they charge us 30 bips to the merchant, right? Not 30 bips, obviously more than 30 bips. They charge to the merchant. That's going to continue to happen, right? Because at the end of the day, the merchant is the one. If you're Visa, you have the merchant by the balls, right? I don't know if you're allowed to say that on this podcast, but I say whatever himself, right? And that doesn't change whether it's stablecoins or not, right? If you have a supply side or merchant side monopoly, you're going to be able to squeeze them and say, look, these people are not going to trust you unless they have the ability to do chargebacks.
Yes.
A stablecoin credit card still has the ability to do chargebacks, right? Because you can say, look, this guy defrauded me. I want my money back. And Visa will say, okay, this guy defrauded you. They do the dispute window, the whole thing happens, and you can still do a chargeback. So at the end of the day, that is what you are like. Look, if you want to take a Visa credit card, the thing that you are guaranteed as a merchant is that Visa, like you will get paid, right? As long as you provide your goods and services. And that policing job is the job that Visa is getting paid for. Everything becomes more capital efficient and the FX costs go down if you can get stuff in stablecoins directly. And the card programs, the people who are actually making these cards, they don't have to have as much cash up front if everything is being settled instantaneously. And that gets passed on to the customers as well.
Still not credit, but it's a better system.
Exactly.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yield on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Introducing SummerFi, one of DeFi's oldest and most battle-tested platforms. SummerFi automates your exposure to DeFi's highest quality yield so you can sit back and enjoy this summer. Deposit stablecoins at USDC or USDT and let SummerFi route your funds into optimized, low-risk lending strategies. With over 100 million in instant liquidity and support for over 34 protocols across Ethereum, Arbitrum, and more, you always stay in control. Choose from a wide range of curated strategies reviewed by independent risk experts, all in just a few clicks. So why work hard for your yield when you can be lazy? Start earning now at summer.fi, the home of the lazy summer protocol.
So I have this ever-growing thesis that this type of matter that we're discussing here, very intricate financial conversation with regards to intersecting with the real world or traditional assets, stablecoins, dollars, credit cards, RWAs, that's like increasingly going to be a very, very hot investable category from VC, from liquid, etc. And then I'm ever-growing that on the other side, completely on the other side, $10 million FTV rounds, the latest spin on prediction markets with like a degen twist or like this application with like a little bit of extra sauce and like very, very early stuff are like increasingly going to be more and more in demand and like wanting to be like invested in by most VCs. And a lot of like the middle stuff, like the L1s, the L2s, the infra, the next DeFi app, these things are kind of like are almost not really that appealing from an investing perspective. If this is the case, I'm curious if you think I'm just full of it or if this is what you're seeing. Like there's going to be two camps of investors that go and win these two categories in a big way. And I think it's going to leave a lot of investors kind of in the middle, not able to like really capitalize on either that well because they're just not that far on that end of the spectrum. So I don't know if this is
Let me make sure I understand your questions. You're saying on one pole there's the fintechy stuff,
super fintechy,
super fintechy, and then on the other side there's the applications that are more consumer facing,
super consumer,
and then the sort of the lonely middle is the infra stuff.
And
infra is just a band.
Traditional apps, traditional ideas. It's like very novel, interesting consumer stuff. And then like very like giga brain fintech. Like you got to understand how payment networks work in the real world, and like everything else is just kind of like yeah.
So I think this is a little bit too strong
Okay.
of a claim. So here's why I think that. First and foremost, it's always been true that with every passing year, there's been fewer and fewer infra investments. I think most people don't perceive this. They think that like infra somehow has been accelerating, but it's the opposite. Infra has been decelerating in that, if you look at Dragonfly vintages, in our fund one, we probably did like, 11, 12 layer ones. That was like 2018 vintage. In our fund two, we probably did like 6. In our fund 3, I think we did 3.
Yeah.
And this fund, we haven't done any so far. Maybe we did 1.
Yeah.
And the reality is that with every passing vintage, that's not surprising, is that the infrastructure stabilizes over time. And we're seeing that stabilization start to happen. Now, that being said, infra is still unequivocally the biggest category. It is the biggest category, right? What are the biggest outcomes in crypto? Bigger than Circle, bigger than Coinbase is Solana, is Ethereum. These are the biggest games that there are to play, period. That being said, it's really fucking hard to play this game. And you have to be really, really good, and you have to have a unique idea and unique angle of attack. And very few people have that.
Yeah.
But what I also believe is that we're not done, right? It's not true that in the year 2020, we figured out everything we would ever need to figure out about how blockchains would need to get built, right? There will be more. Now, will there be, 50 of these? No. Will there be 5? Maybe not even 5. Maybe there's only 1 or 2 more that are going to matter, that are ever going to get built. But as VCs, we're on the lookout for those 1 or 2 things that will matter, because when they do matter, they will be absolutely enormous.
Yeah.
Okay. At the end of the day, scaling blockchains is fundamentally one of the biggest problems in the industry, period.
Yeah.
That's true for Solana. It's true for Ethereum. It's true for Rollup. It's true for everything, right? We still do not have enough block space to do this stuff at scale.
Yeah.
I don't care whether you're Solana, whether you're anybody. Everybody knows that we don't have enough block space, and everybody needs more scale.
Yeah.
So that's why I say infrastructure still matters.
Yeah.
Second, there's a lot of stuff I think that falls in the infrastructure sphere. Now, look, there was an overbuild of things like, MEV infra or all this kind of like really high dimensional ZK something. That stuff, people realize now, demand isn't there. And the problems that they're solving are too esoteric or just not important enough to really warrant a lot more investment. But there's still going to be a lot more that happens as we see what happens, especially in the field of AI, that starts to intersect with crypto. And you and I have talked about this previously, both offline and on the Rollup, is that when that tech is ready, when the AI side is actually strong enough, there's going to be an absolute explosion in what gets built at the infrastructure layer, in retooling how everything in blockchain works.
Yeah.
But that's going to take some time. And that investment is not going to happen right now necessarily, because the prerequisites for it aren't necessarily here yet. But when that happens, there's going to be a lot of infrastructure investment to be done in that space.
I recall this mental image of the dog wagging the tail or the tail wagging the dog. And I think you put this into perspective when it comes to crypto and AI. I think this might have been the last time you were on the Rollup. At least I heard you on the Rollup. And that was maybe a few months ago, maybe even 6 months ago. And so I'm curious, with recent developments in both crypto and AI, has your perspective changed? Do you think, back then it was very much so that, it was sort of an open question, right?
Yeah.
Which one is wagging the other? Do we have a definitive answer now?
Nope.
No, it's still just too early to tell.
Yeah, the reality is that everybody wants the space to move really fast. ChatGPT was now, what is that, 2.5 years ago?
Yeah.
2.5 years ago was the ChatGPT moment. Everybody at that time, and I was among them, was like, humanity is cooked. Unemployment is going to rise to like 15%. The entire economy is going to be transformed and unrecognizable.
Yeah.
Here we are, record low unemployment. Yep. Nothing has really happened.
Nope.
Right? AI writes my emails.
That's it.
Few people have AI girlfriends.
Yeah.
But beyond that, the world is kind of the same. I mean, I'm looking around, the world's kind of the same.
Yeah.
So things, the thing that they say over and over again in Silicon Valley, and especially being in crypto, I used to laugh at this, and now I believe it more and more every single passing year. The old saying in Silicon Valley is people overestimate what can happen in 2 years and underestimate what happens in 10.
Yeah.
And with AI, I was extremely guilty of this.
Yeah.
And I think probably most of us were.
Yeah.
Is that it's really hard to change the fundamentals of how the world is operating.
Yeah.
And it's true in crypto too,
Yeah.
right? Like I was telling a big story about stablecoins in 2018.
Yeah, man.
I was talking about how stablecoins are going to change the world, going to change international payments, the world's going to be unrecognizable, currencies are going to collapse, blah, blah, blah.
It's 2025.
It took a long
and
time.
we're
We're just
just getting
getting started. We're just getting started. And look, it will
Falls within
happen.
The time frame.
That's
the
true.
2 to 10.
That's true.
That's
That's true. So it will happen, but it takes time.
Yeah.
It takes time. And as an investor, I mean, one of the lessons that I've had internalized is shut the fuck up, learn to be patient.
Yeah.
Because look, everything, Mark Andreessen used to say this about the dot-com bubble. Is that, when they were taking pitches during the dot-com bubble and everybody was super excited and people were so convinced the internet was going to change everything. And what he says was that, almost every single pitch that we got, almost all those companies failed. But the other thing he says is that almost every single thing that they told us in those pitches that the internet was going to do eventually happened. Almost everything they said was going to happen did happen, but it took a lot longer than they thought it would.
So these companies were they were right, but they were too early.
They were too early.
So
They weren't the ones to make it happen. So whether it's, Chewy, which became Pets.com, or, Webvan, which became Instacart, almost every single idea eventually happened.
Yeah.
But, people saying, oh, you're going to buy everything online. Is like, well, fucking here we are.
Yeah.
So the lesson to draw here is stay patient and survive.
Yeah.
That's right.
I'd like to go through some of your predictions from this year, actually.
Okay.
We got a couple of them pulled up here.
Oh, good. It's only halfway through the year. You can't call me on these yet.
But we need like a little bit of an update.
Okay, all right. We'll do the update. Now the update.
How you think
The halfway mark.
right here?
Okay, all right.
Halfway mark. It's actually pretty much perfectly halfway through the year. First one, L1s, L2s. The distinction between them is collapsing. Your prediction was effectively that, that they will kind of they will continue to collapse, and they're just kind of be known as like chains. But the blockchain landscape, L1s, L2s combined, is overcrowded and due for a shakeout. The consolidation will be less about technical superiority, be more about having a unique niche and building stickiness through GTM.
I do think that's
Pretty good.
Okay. I feel like that's it pretty well.
Like you look at, Base, Hyperliquid, Solana. We've got Monad and Barachain on here. Monad hasn't launched. Barachain's kind of struggling. But otherwise, name me a chain that is Aptos, Sui, couple of these other kind of L1 story came about.
Yeah.
Like, tell me a chain that is like that,
The other thing about it that I think has also aged well is that there are all these new chains that are launching, and people don't ask are they L1s or L2s anymore.
No, it's
Right? They just know they're chains.
Yeah.
Right? So like, is Hyperliquid an L1 or an L2?
Converge.
Nobody really cares.
Right?
Converge.
Yeah.
Does anyone know? Like, do you know at the top of your head, is Plasma an L1 or L2?
Yeah, I know it's an L1 because we invested, but like,
Okay, there you go. Yeah, but if somebody didn't know, they'd be like, oh, it's a chain. I don't know if it's L1 or L2.
Yeah.
It doesn't really matter.
Right.
Like,
Doesn't really matter.
It doesn't really matter. And I think
I
that
think it's part of like the L1 premium thing that people have been discussing with regards to that kind of losing its value,
I think that that is going away, and there's a premium on chains that people care about and that matter.
Yeah. We'll see how it pans out. All right.
With a unique niche and go to market.
Next one is token launches. Everyone doing huge airdrops via points programs is over. Moving to 2-track. Track 1, KPIs, North Star metric, farm it, be transparent about it. Track 2, smaller airdrops to reward social contributions, but the majority will get distributed via crowdfunding. Meme coins will continue to lose market share to AI agent coins. Migration from nihilism to over optimism. You're coining that one. That was quite wrong. That was
It looked really good in January, and then it went straight downhill. But hey, there's still time. There's still time. There's still time.
So as far as token launches go, I feel like you may have underestimated the amount of InfoFi, Kaido, things that were going to happen. But I think that maybe is with like, it's kind of a KPI. It's kind of a social. It's kind of in the middle of your two predictions. It's like yapping, talking about the project, allocating, 0.5 bips or 0.5% or whatever it is. So you're
Yeah, I mean, it's a dollar is a social airdrop, but I think they're becoming bigger than I originally anticipated they would.
Yeah.
So-
and Kaido is just completely taking over every pre-TGE project.
That's right.
More or less. Yeah.
Yeah. So I just feel like Kaido is running away with it in the airdrop meta. But the thing about the airdrop meta is that it never stands still. It always keeps evolving.
But I think you're right about huge points programs and distributing out a ton of supply. It's like, tell me one token that has launched in the last 3 months that has had this massive points program leading to an airdrop.
Yeah.
I can't think of one.
Yeah.
Okay, you guys?
I mean, Pump Fund is gonna launch. We don't know exactly.
That's this crowdfunding thing that
Right. That is more the crowdfunding. So that might have a large airdrop, but not via a points program.
Right.
Yeah, point
But-
there.
I'm curious because you mentioned on the meme coins one, right? Like the shift from meme coins to AI agent coins hasn't, right? But you said there's still time, and so I'm curious, like
The
if
virtuals has made a little bit of a comeback.
yeah,
So
yeah.
Genesis things.
yeah. It's sort of winking back into page one.
So for this to come true over the next 6 months, what would have to happen? What do you think that could look like?
Look, I don't know. I mean, the latter part of my predictions is all that AI agent coins are cooked anyway, but I think it's like a short-term mania.
Yeah.
And I think in many ways I was surprised at how quickly it receded, but it does seem to be getting back in the limelight. And look, I think the main thing, once AI agents really start to work, right? Not just chatbots and like the chatbot and
Another
coin attach.
10-year thing.
Maybe, but I think what you start to see AI agents doing things
Right.
and really taking on more agency
You're
in a more meaningful way, people will find a way to attach meme coins to that.
Yeah.
Right. At the end of the day, what people find captivating is things that are new and surprising.
Right.
Once AI agents are able to start surprising people again, things that they're not today, I think you will see a meme coin resurgence around those.
Yeah, you're completely right. Like they started tweeting, and that was like surprising. It was like, wow, it's kind of like a sentient Twitter bot. It's like not just like a normal bot. It's but that was shocking.
Yeah.
And then so like whatever's the next thing that people are like, wow, that's exciting.
Exactly.
Then just speculation just follows that. But
That's right. That's right.
next one is regulation. Stablecoin legislation passes.
Passed in the Senate, right?
Yep.
It has
Halfway there.
under Trump, Fortune 100 companies would be more willing to offer crypto to consumers, more risk appetite, aggressive expansion of crypto integration into Web2 platforms. Pretty good. Number 4 is pretty good. AI agent craze. These things are not really agents, of course. I actually quote tweeted this one like a screenshot recently, and I was like, yeah, this is spot on. Like I think it was this novelty just dies out.
Yeah.
People are pissed off. You put out a tweet, you've got 30 people commenting, and it's bots, 30 accounts.
Yep.
It's no fun.
Yeah.
It's just a long one. So but we'll see how that goes out. Actual crypto times AI. Autonomous agents will use crypto to pay each other.
AI agents will start to fall deeper into this category, right? As the surprise factor comes back and the more legitimate ones continue to rise.
Yep.
We'll move the AI agent category into this actual crypto AI category.
I'd say you're looking like 50-50 right now.
Okay. 50-50. Wait, what?
Well, how about a 6?
All right.
Yeah.
So
Why is there 50 centsy? Hold on, Ref. I think we need to review the video.
L1's L2's token launches, got it, stablecoin. All right, yeah.
All right, 50-50. Can you believe this guy?
Well, like 6 months through the year.
So couple. What are your give us 2 or 3 predictions for now to the end of the year?
Right, you're making this.
Do you have any?
No, not really. Like look, I think it's weird that we've seen so much malaise in the crypto native market.
Okay.
And all this mania in public equities.
Yeah, man.
Right? I've never seen this before in my career.
Dislocated.
It's very weird, right? It's like all the craziness that was buying Celestia before is now buying Circle stock.
Yeah, it's
right. And I think what we will see is that at some point it's going to reverse, but I don't know when. I don't know if it happens this year. I don't know if it happens in a year and a half, but like there will be something that just like kicks the fire off and things start to move again on the crypto side. But I don't know when it is. Like when I talk to people, I don't think it's just lower rates, right? It's never just one thing. It's always like, there's some story. Rates aren't a story. Rates are a mechanical thing, right? But like there has to be some, I don't know, some Fortune 50 company decides to do a thing and it like just goes crazy or something. Or Taylor Swift is like, hey, I love, fucking meme coins or something. And it just like reanimates the culture around something.
The culture does feel like tired. It feels just like it feels exhausting.
Yeah. And to be clear, like that's important.
Yeah,
It's important that happens
Right.
because you have to shake people out first,
Yeah.
right? Before you have to like kind of burn, the dead wood
Yeah.
on the floor of the forest before you can actually start to rebuild something
Yeah.
of real energy and excitement.
Yeah.
Right. So, but one thing, so actually I remember that I talked about this on my panel.
Yeah.
So you posted a while back, like, hey, how long do you guys think the revenue meta is going to go? And everybody was dunking on you, and everybody was destroying me. Yeah, they were destroying you in the comments of like, you fucking idiot. Obviously, forever. It's never. The revenue meta is never going away. And I think that it's a cute answer.
Yeah.
But I think this is wrong.
Okay.
I think it's actually wrong. I don't think the revenue meta is never going away. Like obviously, revenue will always matter in some obvious sense.
Yeah.
But like it's obviously true for many assets.
Yeah.
Circle being one of them.
Right.
That people do not focus so much on revenue as they focus on stories, right? Why? What makes a difference? The answer is optimism. If you're optimistic about what is coming in the future, about the growth of this asset, then you're going to focus more on growth
Yeah.
and less on revenue.
On the here and now.
And less on revenue, right? If your focus is entirely on revenue, what that means is that I don't think you're going to grow. Yeah. It means that I think basically you've topped out. These are all the people who are going to be on chain. These are all the things you're going to do on chain,
100%.
right? Like that's what people believe when they say the only thing that matters is revenue.
Yeah.
Okay.
Yeah.
I think that will change, but we're not ready for it right now because nobody believes any of that.
Yeah.
Nobody believes that there's going to be more stuff on chain.
Anything.
They basically believe that on chain is cooked.
It's cooked.
This is it.
It's over.
It's just a big casino,
Yeah,
and
yeah, yeah.
I don't believe that.
Yeah. Right. Yeah.
So, but the market doesn't agree with me, and like the answer is like, look, I think I can outlast the market.
Yeah.
I mean, if you look at any asset, right, especially like equities, you're looking at future projected cash flows. Always.
Exactly.
You're always looking ahead.
Exactly.
And yeah, like the revenue stuff makes it feel like you're just looking at, all right, what did you do last month? It's like looking backwards more so.
Right. OpenAI right now is making, a few $1 billion. Their market cap is in what, 350 billion or whatever their last round was.
Yeah, yeah.
And why is it so high? This is because people believe that they're going to make a lot more money in the future.
Yeah.
Obviously.
Yeah.
So they believe in growth.
Haseeb, man, it's been an absolute pleasure chatting, man.
Always. Thanks for joining us. Thanks for having me. It's always a pleasure.